In today's video, I'll be giving you the ultimate guide you need in order to master market structure. I'll be breaking down market structure from A to Z, so it doesn't matter if you're a complete beginner or have been trading for years, this video will help you either way. One quick thing I want to mention before I actually start this video is that I'm giving away a completely free ebook once this video reaches 30 likes. PDF/ebook on market structure will be in the description. Again, there's no strings attached, it's completely free. But enough of that, let's get right into the market structure breakdown. Alright, first things first, what you guys need to understand with market structure is that market structure can only move in three ways. There's no other way it can move, it can only move in these three ways. That is bullish, bearish, and consolidation. Now, what do these three things actually mean? Well, simply bullish means the market is going up. We have a low here, we have a high here, we have a high low, we have a high, high low, high, high low. The market is going up. It's as simple as that. We have structure breaking to the upside and we are given higher highs when structure is being broken. This move right here is what we call a bullish impulse, and then we have a retracement. Now, what does a bearish market look like? Well, a bearish market is simply the market going down. It's literally as simple as that, okay? We have a low here, we have a high here, we have a low here, we have a low high here, low here, low high here, low here, lower high here. The market is breaking structure to the downside and we are given low lows throughout here. Now, here we have our bearish impulse and then we have our retracement. It's literally as simple as that. Now, one key thing you guys need to know is that market structure will never look this perfect. It will never just be a line like this, a line like this, line like this. Market structure will never ever present itself in the same way. I will never look this perfect. Now, the third type of market structure we have is something called consolidation, also known as a ranging market. This is simply when the market doesn't have any clear directional bias and it's simply ranging between 2 points. You can see right here, it's ranging between these equal highs and these equal lows. These equal highs can also be called resistance and these equal lows can also be called support. Now, the reason we may see a consolidating market is because there's not enough liquidity in the market or there's not enough volatility in the market for it to go anywhere. We usually see ranging markets or consolidating markets in sessions that have low liquidity. For example, Asia session has the least amount of liquidity and the least amount of volume. This means that we are more likely to see a consolidating market or ranging market in times when there's less volume, like Asia session. Now, how do these three market structures actually look like on a live chart? Well, here we have bullish market structure on an actual live chart. You can see we have a high here, we have a low here, we have a high here, high low here, high here, high low here, market break structure giving us a high low here, market break structure giving us a high right over here. Now, market structure, as I said previously, will never ever look the same. It will look different every single time. Obviously, it's dependent on the time frame you're looking at, the pair you're looking at, this even the session you're looking at, because as I said previously, in Asia session the market is more likely to consolidate. But now, how does market structure look like on a bearish live example? You can see you have a low here, high here, low here, low 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 high here, and so on so forth. It's as simple as that. Market structure presents itself in a very simple way because it can only do three things. It can either be bullish, be bearish, or consolidate. Now, for consolidation, this is how a consolidating market, also known as a ranging market, would look. You can see we don't have any clear direction or bias in the market. It's not bullish, it's not bearish, it's simply ranging between 2 points. Now, the 2 points it's ranging between, it's not going to be a straight line, but it's these points right over here. Again, you can see this is resistance, this is support, also equal highs and equal lows. It's as simple as that. Now, a key thing you guys need to understand in market structure is break of structure versus change of character. Now, a break of structure, also known as BOS, is simply the continuation of a trend. This can be both bullish and bearish. If I quickly head back to our previous examples right over here, you can see this right here is a break of structure. Reason being, we're continuing the overall trend. Break of structure again, break of structure again, break of structure again. Now, if we look at our bullish examples, these are all break of structures. Reason being, we're continuing the current trend. We're not reversing the trend, we're simply continuing the trend. You see break of structure here because you broke this high and then we had another high. Break of structure here because you broke this high and had a high, and then break of structure here because you broke this high and had a high. Now, a change of character is something a bit different. This is when the market is starting to reverse, essentially a sign the market will reverse. This means bullish turning into bearish or bearish turning into bullish, also known as change of character. Now, if I quickly show you an example of what I previously showed you, again, price break in previous structure in harmony with the trend is continuing the current trend. Again, this is a bullish trend and it's continuing that bullish trend. This is a bearish trend and it's continuing that bearish trend. If we look at a live example, so you can see this is a live example of break of structure taking place. We have break structure this high, break of structure of this high, break of structure of this high, and break of structure of this high. Now we have break of structure of this low, break of structure of this low, break of structure of this low, break of structure of this low. the key thing you guys need to understand is break of structure is simply continuing the current bias that we have in the market. Now, as I said, change of character is a bit different. Change of character is when price changes the overall trend. You can see in these examples, the trend is starting to reverse. Bullish trend is turning into bearish, and bearish trend is starting to turn bullish. See here, we have a bullish trend, we have a break of structure because we're currently in a bullish trend, and then we have here a change of character because a low is broken, and we also have a lower high, and we're now given that change of character. Why? Because structure is broken. We're not currently in a bullish trend anymore, we're in a bearish trend now. Here we have bearish turning into bullish, we have a bearish break of structure right over here, and then market starts to reverse, giving us our bullish change of character. It's as simple as that. So change of character is literally when price breaks structure the other way and changes the current trend that we're in. Simple as that. You can see here are some live examples of change of character taking place. Here we have a bullish market turning into bearish. You can see we have a bullish break of structure here, another bullish break of structure here, and then we have our change of character here. You can see we've broken this low, and now we have a lower low and a lower high. Then we have lower high and lower low. Here we have a bearish trend turning into bullish. You can see we have a break of structure here, and again, just to reiterate this, break of structure is continuing the current trend. This trend was bearish, sorry. So because this trend is bearish, any moves to the downside breaking previous lows will be a break of structure. But the move that we have here is a change of character. Reason being, we have broken the current trend. You could argue this is also a change of character, and it is, but this would be on the lower time frame. This is essentially looking at the higher time frame narrative. Another really important concept you guys need to understand is internal versus external structure, and this is a really big thing. Internal structure is simply structure on the lower time frame. It is inside the internal structure as per the name, and you have external structure, which is structure on the higher time frame. So for example, this is external structure, and I'll quickly map out for you. Okay, imagine this is structure on the 4 hourly time frame. You can see we have a bullish structure, we're given break of structures, price is moving up, we're having clear break of structures, and then we have a change of character here. The overall trend doesn't matter. This, just imagine this is external structure, and as simple as that. Okay, this is external structure. Okay, then we have a BOS because we turn from bullish to bearish. Now this is external because we're not looking at what's happening here. Okay, if you go on the minute time frame, there's a million different types of trends. We're gonna have bullish, bearish, market back a solid bit. We're not looking at that. We're solely looking at external structure. We're only looking at what's happening on the outside. We're not going in depth into the lower time frames to see what's happening. Now, if I show you this example, the same exact example, just with internal structures, so you guys can get a better understanding. Again, internal means lower time frame structure. Simple as that. You can see here with the internal structure, we have a bullish trend, and then we have a bearish trend. But overall market structure was always bullish until this point on. So you can see these internal structures, we have bullish, then we turn bearish, then we turn bullish again, then we turn bearish again, then we turn bullish again, then we turn bearish again, then we turn bullish again, then we turn bearish again, and then bullish, bearish. You can see internal. If you go even deeper, which would be a bit hard to show on such a graph, but if you go deeper, you might see bullish, bearish, bullish, bearish, 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 bullish. Obviously, this, if you guys can try and manage it, imagine this is the 4 hourly time frame and this is the 15-minute time frame. The blue one is the 15-minute time frame. Now, the reason understanding internal versus external market is extremely important is because you can get involved in a lot more trades regardless of what the higher time frame structure is saying. Now, what I mean by that, if I quickly go back to our previous example and play out right over here, okay, the market is bullish. Would you look for any sells within here? No, you most likely wouldn't. Why? Because you don't know what's happening. You don't know the internal structure. But if I quickly go here, if you look at the internal structure, you can start looking for sells before the actual big sell-off happens, okay? Because what usually happens is the lower time frame structure doesn't always do this, but it dictates the higher time frame structure, because obviously the market is always fractal essentially. So what happens on the lower time frame will follow on the higher time frame. Okay, we have a change of character here, and then we have our actual bearish retracement right over here. And here, would you look for any buys here if you didn't know that this market structure is over bullish? No, you wouldn't. Why? Because this is a bearish market. This right here just looks like a bearish market. But if you go on the lower time frame structure, you can see right here we have our change of character. Obviously, you can look for a bullish order block within here, for example, and then you can get the continuation. And the beautiful thing about this is you can get reverse trades and you can get continuation trades. Obviously, it depends on what you're looking at the time frame. It's dependent on a lot of things, but essentially, you can get into a lot more trades and understand where the market is going to go if you have a good understanding of market structure. It's literally as simple as that. I don't want to overcomplicate because there's not much more in depth. Like, understanding of this is literally as simple as that. The more you understand market structure and where market wants to go, basically the bias of the market on the high time frame, the low time frame, starting from the daily, going down to the starting from the monthly, going on to the daily, to the hourly, 4-hourly, 15-minute, 1 minute, understanding where exactly market structure wants to go. For example, here, I could have gotten involved in this continuation because I knew market was giving me a change of character here before I actually got the break of structure here. Obviously, Forex is a probability game, so I could have been wrong, but you can see right here, if I had a bullish order block, entered off of that, I would have gotten this big continuation and potentially held it up all the way to this zone here. And you can see right over here, we have a change of character here. This change of character was given all the way up here. This was a really big reversal trade that you could have gone into. Obviously, this is just talking on the diagram, but this was a change of character that we got all the way up here. Would you have entered a sell in a bullish market? The simple answer is no. But if you do look on the internal structure, you could have seen that we are given an internal change of character that affects the bigger picture, that affects the higher time frame structure. It's literally as simple as that. But guys, that's actually all from me. Thank you so much for watching to the end of the video. If you do have any questions, please do let me know. You can contact me on Instagram or even on YouTube. Just drop it below in the comments. I've also made a completely free market structure ebook, no strings attached. It's completely free. I've taken my time to make it. You can get it by going into my Telegram group, joining Trading Transmission Telegram, and it should be in there. It's completely free. I think it's a 9 or 10 page ebook completely for free. But yeah, that's all from me. Thank you so much for watching this video and take care.